Good day. Today I am going to report on RA 8791, also known as the General Banking Law. I am Carol Ace Ramos, your reporter today for the class of MBA 113E. The General Banking Law is an act providing for the regulation of the organization and operations of banks, quasi-banks, trust entities, and for other purposes. These are the presentation objectives. This presentation aims to discuss and expound the following: titles and classification of banks, authority of Bangko Sentral, organization, management, and administration of banks, quasi-banks, and trust entities, deposits, loans, and other operations, cessation of banking business, and laws governing other types of banks. What are banks? Banks refers to entities engaged in the lending of funds obtained in the form of deposits. According to the law, there are 6 classifications of banks, and these are: Universal Bank, Commercial Bank, and Thrift Bank. A universal bank is a commercial bank with the additional authority to exercise the powers of an investment house and invest in non-allied enterprises. While a commercial bank is a financial institution that accepts deposits, offers checking account services, makes various loans, and offers basic financial products like certificates of deposits and savings accounts to individuals and small businesses. While a thrift bank is a type of financial institution that specializes in offering savings accounts and originating home mortgages for consumers. Thrift banks are also sometimes referred to as Savings and Loans Association or SNLs. The other classification of banks are Rural Bank, Cooperative Bank, and Islamic Bank. A rural bank is a bank that provides financial services mostly to the residents of the surrounding communities, while cooperative bank is a bank organized or owned by cooperatives or a federation of cooperatives, while an Islamic bank is a bank that conducts business in accordance with the principles of the Sharia or Islamic law. Operations do not involve interest or riba, which is prohibited by the Sharia. One of the distinguishing characteristics of these banks is the required minimum capitalization as mandated by the Bangko Sentral. Universal banks have a minimum capital requirement as much as 20 billion pesos. The second chapter of this law is the scope of authority of Bangko Sentral. As defined by this law, Bangko Sentral has supervisory powers, and these are the issuance of rules of conduct or the establishment of standards of operation for a uniform application to all institutions by authority of the Bangko Sentral, to conduct examination to determine compliance with laws and regulations, overseeing to ascertain that laws and regulations are complied with. The Bangko Sentral has regular investigation to determine whether an institution is conducting its businesses on a safe or sound basis, to conduct examination to determine compliance with laws and regulations, inquiring into the solvency and liquidity of the institution, enforcing prompt corrective action. Usually, the Bangko Sentral conducts a yearly examination or a audit. The Monetary Board or the governing body of Bangko Sentral may prescribe ratios ceilings, limitations, or other forms of regulation on the different types of accounts and practices of banks and quasi-banks, which shall, to the extent feasible, conform to the international accepted standards, including those of the Bank for International Settlements. One of the examples of this ratio is the capital adequacy ratio, which has a standard industry rate of 10%. No person or entity shall engage in banking operations or quasi-banking functions without authority from the Bangko Sentral, provided that that entity is authorized by the Bangko Sentral to perform universal or commercial banking functions, which shall likewise have the authority to engage in quasi-banking functions. The determination of whether a person or entity is performing banking or quasi-banking functions without Bangko Sentral authority shall be decided by the Monetary Board. If found operating without the authority of Bangko Sentral, these persons or entities will be subject to appropriate sanctions under the new Central Bank Act and other applicable laws. The Bangko Sentral shall have the authority to examine a bank or to examine an enterprise which is wholly or majority owned or controlled by the bank. As what I've said earlier, examines by the Bangko Sentral is usually done annually, at least annually. Now, let us move on to the organization, management, and administration of banks, quasi-banks, and trust entities. The Monetary Board may authorize the organization of a bank or a quasi-bank subject to the following condition. First is that the entity is a stock corporation. Second, that its funds are obtained from the public, which shall mean 20 or more persons, and that the minimum capital requirement prescribed by the Monetary Board for each category of banks are satisfied. The bank licensing process shall incorporate an assessment of the bank's ownership structure, directors, and senior management, its operating plan and internal controls, as well as its projected financial condition and capital base. Foreign individuals and non-bank corporations may own or control up to 40% of the voting stock of a domestic bank. These rules shall apply to Filipinos and domestic non-bank corporations. The percentage of foreign-owned voting stocks in a bank shall be determined by the citizenship of the individual stockholders in that bank. The citizenship of the corporation, which is a stockholder in a bank, shall follow the citizenship of the controlling stockholders of the corporation, irrespective of the place of incorporation. Two or more corporations owned or controlled by the same family group or same group of persons shall be considered related interest and must be fully disclosed in all transactions by such corporations or related group of persons. With the board of directors of each bank, that the provision of the Corporation Code to the contrary notwithstanding, there should be at least 5 and maximum of 15 members of the board of directors of bank, and 2 of which shall be independent directors. This independent director is a person other than an officer or employee of the bank. Most likely, the independent director counts from the minority of the stockholders of the bank. In the case of bank merger or consolidation, the number of directors shall not exceed 21. To protect the funds of directors and creditors, the Monetary Board may regulate the payment by the bank to its directors and officers on compensation, allowance, fees, bonuses, stock options, profit sharing, and fringe benefits, only in exceptional cases and when the circumstances warrant. So these circumstances are, but not limited to, when the bank is under controllership or conservatorship, or they are conducting business in a safe and unsound manner, or they find bank is in an unsatisfactory financial condition. As you can see, if the bank do not comply with the rules or the laws and regulations provided by Bangko Sentral, or they have not met the required industry ratio, ceilings, and limitation of banks, or they are practicing unsafe and unsound banking practices, so a lot of the benefits, allowance, or the services, including services, might be prohibited or limited by the Bangko Sentral. So as they see deem fit for the bank to recover its financial condition. Maintain the quality of bank management and afford better protection to depositors and the public in general. The Monetary Board shall prescribe or pass on and the qualification and disqualification of individuals elected or appointed bank directors or officers and disqualify those found unfit. Most likely, the Bangko Sentral or the Monetary Board will consider those directors who have already experience with, who already have bank experiences. After due notice to the Board of Directors of the bank, the Monetary Board may disqualify, suspend, or remove any bank director or officer who commits or omits an act which render him unfit for the position. In determining whether an individual is fit and proper to hold the position of a director or officer of the bank, regard shall be given to his integrity, experience, education, training, and competence. No appointive or elective public official, whether full-time or part-time, shall at the same time serve as an officer of any private bank. Exception is when the service of the public official is incident to the financial assistance provided by the government or a GOCC, or when the law provides otherwise. So if you run a public position, you have the option to resign of your current bank position. One of the distinct capabilities of universal or commercial banks is that they can open offices or branches within or outside the Philippines prior approval of the Bangko Sentral. Unlike other banks, like rural banks, they have to apply for approval prior establishing other branches. So a bank and its branches and offices shall be treated as one unit. So the banking days and hours of a bank is that they shall serve at least 6 hours a day, and banks may open for business on Saturdays, Sundays, and holidays for at least 3 hours a day, provided that they will report to Bangko Sentral the additional days or other working days which their branches will transact businesses. So every day, if the bank decides to close, especially if there's a holiday, they must report the said operations to Bangko Sentral. Let's now discuss the deposits, loans, and other operations of banks. First is universal banks. Operations of universal banks. Universal banks have the following powers. First is the power of an investment house as provided in existing laws. Second, have the authority to exercise in addition to the powers authorized for a commercial bank. And lastly, they have the power to invest in non-allied enterprises. And to equity investments, universal banks may invest in equities of allied and non-allied enterprises as may determined by the Monetary Board. So they can be financial or non-financial allied enterprises. Except as the Monetary Board may otherwise prescribe, the total investment in equity shall not exceed 50% of the net worth of the bank, and the equity investment in any one enterprise, whether allied or non-allied, shall not exceed 25% of the net worth of the bank. More so, the acquisition of such equity or equities is subject to the prior approval of the Monetary Board, which shall promulgate appropriate guidelines to govern such investments. Universal banks can own up to 100% of the equity in a thrift bank, a rural bank, or a financial allied enterprise. A publicly listed universal or commercial bank may own up to 100% of the voting stock of only one other universal or commercial bank, while equity investments in non-financial allied enterprise. Universal banks can own up to 100% of a non-financial allied enterprise. In owning equity investments of universal banks, we can summarize the following. So, universal banks can own 100% to financial and non-financial allied enterprise, 35% to single non-allied enterprise, and 40% of quasi-banks. Our next stop is commercial banks. Commercial banks shall have the general powers incident to corporations. All such powers may be necessary to carry on the business of commercial banking, such as accepting drafts, issuance letter of credit, discounting, negotiating promissory notes, drafts, bill of exchange, and other evidences of debt, accepting or creating demand deposits, receiving other types of deposit and deposit substitutes, and extending credit subject to such rules as the Monetary Board may promulgate. Commercial banks may invest in equities of allied enterprises as may be determined by the Monetary Board, may it be financial or non-financial. Unlike universal banks, commercial banks can only own investment in allied but not in non-allied services. So, except as the Monetary Board may otherwise prescribe, the total investment in equities of allied enterprise shall not exceed 50% of the net worth of the bank, and the equity investment in any enterprise shall not exceed 25% of the net worth of the bank. We can summarize the equity investment of commercial banks with the following. So 100% can be invested on financial and non-financial allied enterprises, while 40% only for quasi-banks. Let us now discuss the operations of all banks, quasi, and trust entities. A bank other than a universal or commercial bank cannot accept or create demand deposits upon prior approval and subject to such conditions and rules as may prescribe by the Monetary Board. The Monetary Board shall prescribe the minimum ratio which the net worth of a bank must bear to its total risk assets, which may include contingent accounts. So, this ratio is called the capital adequacy ratio. The industry standard of this ratio is 10%. So, if in this case that the bank cannot reach this industry standard, BSP might prohibit or limit the functions of the bank. So, one example is the distribution of dividend, the discounting of loans, or purchase of additional assets. No director or officer of any bank shall directly or indirectly, for himself or as a representative or agent of others, borrow from such bank, nor shall he become a guarantor, endorser, or surety for loans from such bank to others. If allowed, loan accommodation shall be limited to an amount equivalent to the respective unencumbered deposits and book value of their paid-in capital contribution in the bank. So this is in line with the previous section that officers or those three, directors, officers, stockholders, and the related interests must be monitored at all times with all their transactions since they also have limitations. Loans and other credit accommodations against real estate chattel and intangible asset. So the loan amount shall not exceed to 75% of the appraised value of the security plus 60% of the appraised value of the insured improvements for the real estate. The total amount of loans, credit accommodations, and guarantees that may be extended by a bank to any person, partnership, association, corporation, or other entity shall not exceed 20% of the net worth of such bank. This may also be increased by an additional of 10% if the net worth of such bank provided that the additional liabilities of any borrower are adequately secured. The Monetary Board may take into account the requirements of the economy for the effective utilization of long-term funds, prescribe the maturities as well as related terms and conditions for various types of bank loans and other credit accommodation. So for banks must establish or evaluate the purposes of the loans granted to their clients. For example, if the purpose of the loan is to finance the production of rice, so the banks should consider the term of the loan with the cycle of planting and harvesting of rice. That is why banks shall grant loans and other credit accommodation only in amounts or for the periods of time essential for the effective completion of the operations to be financed. The bank must also ascertain that the debtor is capable of fulfilling his commitments to the bank by conducting background investigation in order to evaluate the individual's capacity to pay. The Monetary Board may prescribe the maturities as well as related terms and conditions for various types of bank loans and other credit accommodation. They shall regulate the interest imposed on microfinance borrowers by lending investors and similar lenders, such as but not limited to the unconscionable rates of interest collected on loans by those so-called loan sharks. The amortization schedule of loans shall be adapted to the nature of the operations to be financed. With maturities of more than 5 years, periodic amortization payments must be made at least annually. And if the borrowed funds are to be used for purposes will not initially produce revenues adequate for regular amortization payments, then the bank may give the option to restructure the said loan, but in no case shall the initial amortization date be later than 5 years from the date granted. The borrower has the option to pay its unpaid balance in whole or in part, subject to reasonable terms and conditions that may be agreed upon by the bank and the borrower. The Bangko Sentral shall provide incentives to banks which, without government guarantee, extend loans to finance educational institutions, cooperatives, hospitals, and other medical services, socialized or low-cost housing, local government units, and other activities with social content. For the foreclosure of real estate mortgage, the borrower, with the owner of the real estate, have the option to redeem the property within 1 year and must pay within 1 year the interest and expense received by the bank. More so, the buyer at the auction sale, which was the real mortgage was sold, The concerned buyer, whether in judicial or extrajudicial foreclosure, shall have the right to enter upon and take possession of such property immediately after the date of the confirmation of the auction sale and administer the same in accordance with the law. All debts due to any bank which interest is past due and unpaid for such period as may be determined by the Monetary Board, unless the same are well secured and in the process of collection, shall be considered as bad debts. The Monetary Board may fix by regulation or by order in a specific case the amount of reserves for bad debts or doubtful accounts or other contingencies. Writing off loans and other credit accommodations and advances and other assets shall be subject to regulations issued by the Monetary Board. The bank may acquire real estate with the total investment in such real estate and improvements thereof, including bank equipment, shall not exceed 50% of combined capital accounts. A bank may acquire, hold, or convey real property under the following circumstances. First, as a mortgage. Two, in good faith by way of security for debts, a satisfaction of debts contracted in the course of its dealings, purchase at sales under judgment, decrees, mortgages, trust deeds held by it, and such shall purchase to secure debts due shall be disposed of by the bank within a period of 5 years or as prescribed by the Monetary Board. The Monetary Board shall establish the criteria for reviewing major acquisitions or investments by a bank, including corporate affiliations or structures that may expose the bank to undue risk or any way hinder its operation. No director, officer, employee, or agent of any bank shall make false entries in any bank reports, disclose to any unauthorized person any information relative to the funds in the custody of the bank without order of a court, accept fees to approve loan or other credit accommodation, outsource inherent banking functions. And also, the borrower of a bank shall not make misrepresentation of material facts for the purpose of obtaining a loan or other credit accommodation, attempt to defraud the said bank, offer any director or employee of a bank any gift or money, and prudently overvalue property offered as security for a loan or other credit accommodation. The Monetary Board shall consider any of the following circumstances to be deemed as conducting business in an unsafe or unsound manner. The act or omission of which resulted or may result in a material loss or damage or abnormal risk or danger to the safety, stability, liquidity, or solvency of the institution, resulted in a material loss or damage or abnormal risk to the institution's depositors, creditors, investors, stockholders, or to the Bangko Sentral or the general public. The act or omission of which resulted and caused any undue injury or has given any unwarranted benefits, advantage, or preference to the bank or any party that is charged with the director or officer of his duties and responsibilities through manifest partiality, evident bad faith, or gross inexcusable negligence, or it involves entering to any contract or transaction that manifestly and grossly disadvantages to the bank, quasi-bank or trust entity, whether or not the director or officer profited or will profit. Neither shall the bank nor quasi-bank declare dividends if at the time of declaration its clearing account with the Bangko Sentral is overdrawn, or it is deficient in the required liquidity floor for government deposits for 5 or more consecutive days, or it does not comply with the liquidity standards ratios prescribed by the Bangko Sentral for the purposes of determining funds available for dividend declaration, or it has committed a major violation as may be determined by the Bangko Sentral. So in that case, as what I have said earlier, that the Bangko Sentral may prohibit the dividend declaration if they find that the bank has not passed examination, or they have found that it has been practicing unsafe and unsound banking practices. Let us now move on to the cessation of banking business. In the cessation of banking business, any bank may opt to voluntarily liquidate their operations. However, they must have a written notice of such liquidation, which shall be sent to the Monetary Board before such liquidation is undertaken. And the Monetary Board shall have the right to intervene and take such steps and may be necessary to protect the interest of the creditors and depositors. More so, the bank was voluntarily liquidated their operation must surrender their license to operate. Any director or officer of any bank declared insolvent or placed under receivership by the Monetary Board and refuses to turn over the bank records and assets to designated receivers and may tamper bank records or appropriates himself or another party or destroys or causes the misappropriation and destruction of the bank's asset shall be subject to the penal provisions of the Central Bank Act. Let us now move to the provisions discussing the foreign banks. Foreign banks may acquire up to 60% of the voting stock of a bank under the Foreign Banks Liberation Act and the Thrift Acts as authorized by the Monetary Board. The Monetary Board may also revoke the license to transact businesses in the Philippines of any foreign bank if it finds that the foreign bank is insolvent or in an imminent danger thereof, that its continuance in the business will involve probable loss to those transacting business with it. And also, in the case of a foreign bank which has more than one branch in the Philippines, all such branches shall be treated as one unit. And the last topic to discuss is the trust operations. As defined by law, the trust entity shall administer the funds or property under its custody with the diligence that a prudent man would exercise in the conduct of an enterprise of a like character and with similar aims. A trust entity shall have the power to act as a trustee on any mortgage or bond issued, and to accept and execute any trust consistent with the law. He shall act under the order or appointment of any court as guardian, receiver, trustee, or depositary of the estate of any minor or other incompetent person, and as a receiver and a depositary of any monies paid under court by parties to any legal proceedings and a property of any kind which may be brought under the jurisdiction of the court. Act as the executor of any will when it is named the executor thereof. Act as the administrator of an estate of a deceased person. Act and execute any trust for holding, management, and administration of any estate, real or personal, and rents, issues, and profits thereof, and establish and manage common trust funds subject to rules and regulations as may be prescribed by the Monetary Board. Before Before transacting trust business, every trust entity shall deposit with the Banco Central a security for the faithful performance of its trust duties, cash or securities approved by the Monetary Board, in amount equal to not less than 500,000 pesos or much higher amount as may be fixed by the Monetary Board. And that ends my presentation on general banking law and its salient features. Thank you so much for listening, and if you have any questions, you may reach me through my email ad posted in this presentation. Thank you and have a good day.